I'm Caroline Hyde, in for Emily Chang. This is Bloomberg Technology. Coming up, North Korea's clear and present danger. The UN Security Council schedules an emergency session after yet another ballistic missile launch. We discuss the reaction from around the world and the plan from the Pentagon. Plus, Expedia CEO Dara Khosrowshahi speaks for the first time after Uber chooses him to take the top job at the world's biggest startup. So what's his next move? And is he up to the challenge? And he's been one of the most recognizable names in the tech industry for decades. We'll bring you our exclusive conversation with Michael Dell. First to our lead, a major international story we are monitoring for you. The United Nations Security Council is meeting Tuesday to discuss how to handle North Korea's latest provocation. On Monday, North Korea fired a ballistic missile that passed over the north of Japan before breaking up. Earlier today, UN Ambassador to the UN, Nikki Haley, called the launch, quote, unacceptable and irresponsible, adding that something serious has to happen. And as for how the markets responded to the launch, well, stocks pulled back across the globe, with Europe posting the worst losses, while US markets, as you'll see, have now just about rebounded. And there was an initial rush to safe haven assets like gold, US treasuries. For more, we're joined from Washington by Lindsey, Director of Political Security Affairs at Asia Society. Wonderful to have you with us, Lindsey. And first of all, I really want to get the so-called unprecedented, grave and serious threat that the Japanese Prime Minister Abe sees. How unprecedented actually were these strikes?
So the latest missile test was definitely an escalation in terms of provocation by North Korea. This was the first time ever that we've seen North Korea launch a ballistic missile to overfly Japan. And so I think that definitely, especially for Japan, is a significant and extremely serious threat. I do think, though, we have to recognize that there is a bit of calibration that North Korea was probably doing here. They were quite blunt over the last month in stating that they might actually conduct a test near Guam. They didn't. So I think you have to assume that they were trying to calibrate what they did in a way that would ratchet up tensions, but at the same time not cross any red lines that would actually cause the United States to initiate any kind of conflict or action.
Yeah, this is sort of seen as almost political game playing that's going on by North Korea at the moment. And how, therefore, do we see the response likely to be, particularly from the United States, for example? What are the realistic options out there for them?
I don't actually think this changes the options the United States has all that much. I expect that what you're going to see is another push for further sanctions and tightening of sanctions coming through the United Nations. There are additional steps that they could take beyond the sanctions that were just implemented at the beginning of August. They could go after the North Korean textile industry. They could go after oil, North Korea's access to oil from China, which is something that hasn't been done yet and could potentially be significant. And I think the one that a lot of people would really like to push for is actually sanctions against entities, third-party entities and companies that are doing business with North Korea, to really try to eliminate their access to other financial systems.
Fascinating. I just want to bring in now our national security reporter, who's Nick Wadhams, joining us live now. And Nick, I mean, we're monitoring, of course, the UN Security Council meeting as well. What do we know that will come out, particularly from perhaps statements from Donald Trump himself, taken to Twitter as yet?
He has not yet gone to Twitter, and that, interestingly, is sort of a story in itself. What we're hearing is that really what you've seen from the administration so far on this North Korean launch is a bit more of an understated, hopefully what they hope will be a more sort of disciplined approach to a North Korean launch. They don't want to sort of lose their heads and go off half-cocked. What we've heard is that this is directly attributable to the new Chief of Staff, John Kelly, who really wants a sort of interagency process that sort of harkens back to what you would have seen in past administrations. I spoke with someone at the State Department today who said, you know, this is sort of how normal governments do things. When North Korea does something like this, you consult with allies, as Secretary of State Rex Tillerson did and President Donald Trump did. You all get on the same page, and then you release a unified message. So that's likely what we'll see out of the Security Council today.
Lindsey, you were outlining perhaps how we might see yet more economic sanctions coming North Korea's way. But what about also Japan's reaction to this? Because they have sort of felt that maybe it's the time they can start building up their own military force in respect to this.
I think it will amplify voices within Japan and strengthen Abe's position, which has been to push for a more sort of muscular Japanese foreign policy. So further push for perhaps increased defense spending. Certainly, I think more ballistic missile defense in Japan. There is an ongoing argument about whether Japan should seek out offensive strike capabilities, which it obviously is not able to do right now because of constitutional restraints. And I think that it will further expand that argument in the folks who believe that Japan ought to be able to do that.
And Nick, talk to us about the balancing act that is going on with the White House at the moment, because they don't have just one international crisis going on at the moment, but they've got one domestic one as well. And we have seen, of course, pictures of Donald Trump in Houston, Texas. How is he managing to nuance his words? Is he responding to questions regarding North Korea at this sort of events?
Well, so far he's responded to shouted questions just by saying, "We'll see, we'll see." I mean, look, what we do know here is that the administration is trying to do something a little bit different. So in the last month or so, they came up with a very detailed North Korea strategy for how to respond to certain threats and certain actions. So they essentially have a game plan in place now. And this is sort of the first foreign policy issue around the world where they really have a sort of ladder of steps. And, you know, if North Korea does X, the U.S. will do Y. And we've been speaking with administration officials all day, and they say this is going so far according to plan. North Korea did something that the United States suspected it might do at some point, and so now you're seeing the response. A closed session of the Security Council, a relatively understated response so far. Hopefully, as Lindsey said, a response that would then move toward increased economic pressure, which the United States really still sees as the main path forward. Rex Tillerson's so-called peaceful pressure campaign that really uses China as the conduit to strangling the North Korean regime's economy and hopefully bringing it back to the table for negotiations.
Fascinating analysis from you both. We thank you very much indeed. Lindsey Ford, Director of Political Security Affairs at the Asia Society, and Bloomberg's Nick Wadhams. Great to have you with us. Now, as Tropical Storm Harvey continues to inundate the Texas Gulf Coast, Facebook is offering ways for users to contribute to relief efforts. Facebook announced Tuesday that it would match the Harvey disaster relief funds raised by its users up to $1 million. Meanwhile, Amazon and Whole Foods also announced they will match donations made via the Amazon website to the Red Cross, while Microsoft pledged $100,000 to the organization and said more will come. Now, Expedia CEO Dara Khosrowshahi speaks out for the very first time since his name was floated for the Uber CEO role, while he says this is a, quote, once-in-a-lifetime opportunity. This is Bloomberg. Now, a story we're watching for you. Google will comply with Europe's demands to change the way it runs its shopping search service, a rare instance of the internet giant bowing to regulatory pressure to avoid more fines. Now, the tech giant faced a deadline on Tuesday to disclose how they plan to stop discriminating against rival shopping search services. Google said it's sharing the plan with regulators but declined to comment further. If Google did not submit a plan to the EU by the deadline, it would have faced daily fines on top of its record $2.7 billion penalty issued earlier this year, if it didn't comply, that is, in a month's time. Now, to a developing story. The Justice Department has begun to review allegations that Uber may have violated the Foreign Corrupt Practices Act, which bans the use of bribes to foreign officials to get or keep business, citing people familiar with the matter. For more on this story, we're joined now by Bloomberg's Eric Newcomer, who covers all things Uber. A breaking story, Eric, and talk to us about it. I mean, is this one country? Is this many countries where potentially bribes were given?
Yeah, there are lots of questions that we don't have answers to at the moment. I mean, it's never a dull day in the world of Uber. I mean, I think this is the second sort of Justice Department related inquiry. You know, we have the other around grayball the effort to hide Uber drivers from law enforcement officials. Here we don't know exactly the focus of the inquiry. We know that Uber is cooperating. We'll be getting more details as soon as I get off the TV. Working on it.
Certainly. So Justice Department, of course, they're not giving any statements at the moment either, according to a spokeswoman. So we'll see how that unfolds. Fascinating story. And as you say, they've had many a challenge. And there was some silver lining amid the clouds that a new CEO had been announced. Well, hadn't been announced, but certainly was on the table. And we hear from the CEO of Expedia, who is likely to be coming to Uber as CEO, of course, Dara Khosrowshahi. And it looks like he's up for the challenge, but not unaware of some of the challenges that do indeed face him.
Right. I mean, he's calling it the opportunity of a lifetime. At this point, Barry Diller at IAC acknowledged that Dara was probably going to accept the offer. You know, our sources have been saying that. I think Uber's just sort of dotting the I's, crossing the T's. And then to your point, yeah, he talked about diversity a little bit there. You know, Expedia seems to have done better than Uber, at least in terms of recruiting sort of female software engineers. Definitely something Uber needs to improve on. He sort of took a tone of, you know, I need to wait till I'm there and sort of take in this situation, but he talked about sort of broadly the problems in the industry in terms of diversity and inclusion. And
certainly top priorities for him. I mean, the list feels almost endless, but notably he's got to get himself a CFO, a CMO. I mean, the top executives. Is that really where the focus will lie, first of all?
Yeah, I mean, I think for a CEO, shoring up your executive team's got to be the top priority. I mean, he's a former chief financial officer himself, certainly is going to understand the importance of getting a high-profile person in that position, if not an interim. At first, the company's already said they want to hire an interim board chair, I mean, sorry, not interim, an independent board chair to sort of bring fresh perspective and independence to the board. So I think that's going to be very important, but obviously he's going to have to do that sort of in cooperation with the existing board. And then, like you said, just there's so many vacant positions. They definitely need more top engineering talent, top operations talent. You know, you can go on and on. So he's going to have to fill out the team, and that's going to be a top priority.
And what about the ongoing saga that is the battle between Benchmark Capital and Travis, who was, of course, previously the chief executive? Because that sideline show doesn't seem to be going anywhere.
Yeah, sideline. Yeah, it's a big, yeah, exactly. It's a huge fight going on sort of amidst all these other issues. I think there's another hearing tomorrow. There's this question of whether Travis will be able to bring this case into private arbitration, which would take it out of the headlines a little bit. Definitely his hope. But right now, you know, it's Benchmark Uber's largest investor against its former CEO with allegations of fraud, asking Travis to relinquish his 3 board seats, while, you know, the former CEO of the company wants to hold on and have sort of a big role on the board going forward. And that's an issue that didn't seem to get resolved as part of this CEO search process like many people had hoped it would.
I mean, Eric, just to recap, if you think about it. So there's this ongoing feud going on in the public arena between the previous CEO and the investor, top investor of Uber. You've got now to be unveiled breaking news that the Department of Justice is investigating, looking into Uber for potentially whether they violated bribery laws. You've got ongoing needs to hire executives. Is Dara Khosrowshahi up for it in terms of capable, the people you're talking to? Is there a sigh of relief? Is he the right man for the job?
You know, he's not the titan of industry that Meg Whitman or Jeff Immelt would have been, but I think there is a lot of confidence. I mean, this is a guy who ran Expedia very capably for, I think, 12 years. You know, I talked to a former chairman of the Federal Communications Commission. Like, he has deep connections sort of in government, outside of them, and has the expertise here to work with governments and try to bring Uber sort of back under control and in line with, you know, regulators and the law. So I think he definitely understands, he's got to understand that that's a major challenge that he's going to face as CEO, and clearly something that he has some capability to handle.
An opportunity of a lifetime, as he calls it. As ever, it's never a dull moment, as you say,
Never.
and we'll have you on throughout. And we'll let you get back to that breaking news about the DOJ. Thank you very much indeed, Bloomberg Technologies' Eric Newcomer. Now coming up, Apple stock's monster growth this year has led to a massive payday for CEO Tim Cook. We'll break down how Cook's compensation stacks up to other tech leaders this year. And a feature I'd like to bring to your attention. It's, of course, our new interactive TV function. You can find it at TV Go on the Bloomberg. You can watch us live. If you miss an interview, you can go back to it. You can send our producers a message, play along with the charts we bring you on air. This is for Bloomberg subscribers only, though, I'm afraid. Check it out, TV Go. This is Bloomberg. Now, a stock we're watching, shares of Apple have hit a new all-time high in today's session. This record caps massive growth in the stock price this year, which has advanced about 40%, as you'll see, and it could have further to run, with the average price target for the stock among analysts still sitting slightly ahead at $174. Meanwhile, Apple's stock success this year has helped push CEO Tim Cook's compensation to new heights. Last week, Cook was awarded more than 560,000 shares of Apple stock, valued at nearly $90 million. Now remember, Cook's total awarded compensation surged to $150 million last year, compared to $72.9 million in 2015. For more details on Cook's payday, let's bring in Anders Mellon, who wrote about the topic for Bloomberg News. Anders, I mean, fascinating. And just talk to us about how the compensation is done for Tim Cook. Explain the structure, because in some ways he voted for it himself.
Yeah, so Apple has a special setup with Tim Cook. When he came into the CEO role, Apple said, okay, we're going to give you a massive chunk of stock that you're going to get in 2 increments over 10 years. It was worth about $370 million at the time. And a couple of years later, it was restructured and instead split up over the years. So Cook, typically in a typical year, he can collect about 280,000 shares as long as he remains on the job, and then another up to 280,000 shares if Apple's share price beats at least 2/3 of the companies in the S&P 500 index. And they did so in the past 3 years, so he collected all those shares.
Wow, and I'm looking at Pay Go function on Bloomberg. If you type in pay, hit your button go, and you can see how he really is high-flying and adored. He's number 2 at the moment in terms of where he stood previously. But talk to us about, therefore, where Tim Cook stacks up versus the rest of the tech ecosystem with this new compensation that's being handed out.
I mean, in the bigger scheme of things, and it's almost absurd that even Tim Cook's figure, which is really, really high, does not hit the ceiling when it comes to pay in the tech sector. We've seen Mark Lohr at Walmart, who's north of $200 million in 2016. Prior to that, we have Sundar Pichai, who also every other year he gets a big stock grant from Google. So even though Apple's Cook gets quite a bit of money, it still doesn't tend to be up at the very top among those guys.
Nothing like a bit of M&A to help the likes of Mark Lohr over at Walmart, of course, which always helps his compensation. But talk to us, Anders, about whether or not this will be sustained. Will we always see Tim Cook's compensation tied to the share price performance? Should it be perhaps tied to another critical measurement, revenue, for example?
So that's frequent debate among pay consultants and people in the boardroom and in the executive suite. Is share price really the best measure of corporate performance? Because other people say, or some people say, that perhaps you should focus on other internal financial metrics such as revenue or product development, which will in turn drive share price, or share price being the ultimate goal, but perhaps not the journey to get there. The way Apple's award for Cook is set up, it's tied to share price. The board can change that, but it's been successful both for shareholders and for Cook himself. So I wouldn't say that I see any changes coming in the near term, but who knows?
And how does it sit with those that work at Apple, with the general public? I'm speaking here from London, where there is so much hand-wringing and indeed government pressure and general public outcry when you see CEOs paid significantly more than the average employee and the average person on the street. How does it be absorbed in America, where it's a little bit more land of those that can make it?
Right, yeah. Making a lot of money is certainly not seen as a bad thing in the United States of America. We know that. Cook actually did get a bit of pushback for his compensation when he first signed on and got this large $370 million award. So it was actually at Cook's request that part of these shares were tied to the company's share price performance, and if the shares don't beat at least 2/3 of the companies in the S&P 500, then he gets fewer of those shares. So, and thus far, Apple shareholders, you know, if you've been an Apple shareholder, you have been doing quite fine. And in the bigger scheme of things, there seems like people in the tech sector tends to get more of a carte blanche when it comes to pay, as opposed to other sectors such as banking.
And always notable that, of course, Tim Cook says he'll give most of it away. Thank you very much, Bloomberg's Anders Mellon. Great reporting as ever for us. Thank you. Now, coming up, we bring you an exclusive conversation with Dell chairman and CEO. Of course, it's Michael Dell. His thoughts on the future of the cloud, next. And if you like Bloomberg News, check us out on the radio, why don't you? You can listen on the Bloomberg Radio app, Bloomberg.com, and in the US on SiriusXM. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with a check of first word news. President Trump is in Texas to witness the devastation from Harvey. He arrived in Austin today after his stop in Corpus Christi, where he told residents, "We're going to get you back and operating immediately." He also received a briefing from local officials. U.S. Ambassador to the UN Nikki Haley says it's time to take serious action on North Korea.
No country should have missiles flying over them like those 130 million people in Japan. It's unacceptable. They have violated every single UN Security Council resolution that we've had. And so I think something serious has to happen.
Yesterday, Pyongyang fired a ballistic missile designed to carry a nuclear payload that flew over Japan. Iran's President Hassan Rouhani warned today that while his country won't be the first to violate the terms of that 2015 nuclear accord with world powers, he won't allow the U.S. to disregard its own obligations. Meantime, an Iranian government spokesman rejected calls made last week by UN Ambassador Haley to allow inspections of its nuclear sites, saying the facilities and any information about them are classified. Russia is dismissing concerns about its planned military drills simulating a potential response to foreign-backed extremists. The planned war games by Russia and Belarus are scheduled to start on September 14th. Some alliance members have criticized Moscow for a lack of transparency. Others worry its forces may remain in Belarus. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 7:30 Wednesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, we're seeing some strength in futures on the ASX, high by about 0.5% right now, as we wait on the last few earnings to come through. Boral, the construction company, and the gold nickel miner Independence Group will be reporting before the open here in Australia. Nikkei futures also looking stronger as markets in Japan wait on retail sales numbers for July. Expected to see an increase of 1/3 there. And China airline stocks are going to be worth watching, with China Eastern reporting a first half profit up 34% after the close on Tuesday, and China Southern profit down 11%. China Eastern's been pulling back on its South Korean services and boosting flights to Japan and domestic flights as well. Later on today, Air China and the big banks out of China as well. China Construction, ICBC and Bank of China all reporting. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. Now, VMworld has kicked off in Las Vegas. The annual event is one of the tech industry's top cloud infrastructure and digital workspace events. Earlier, Bloomberg's Emily Chang caught up with none other than Dell Technologies Chairman and CEO Michael Dell for an exclusive interview. With so many announcements at the event, Emily started by asking, well, what he was most excited about. Take a listen.
You know, what we're seeing is the emergence of this sort of multi-cloud world. And customers are figuring out that cloud is really not a place, it's a way of doing IT. And they're modernizing, automating their existing on-premise infrastructure, and they're also leveraging the public cloud and managed services and software as a service. And VMware is incredibly well positioned with all the innovation that it's creating to enable that new connected future and do it in a secure manner.
So when you say multi-cloud, you mean public and private? You
Absolutely.
think hybrid cloud is the way of the future?
I think customers are adopting IT in a hybrid fashion. And you know, all the customers we talk to are already using many different modes of IT. And when you imagine forward to the future of an enormous number of connected devices, as the cost of sensors comes down, you're actually going to have a distributed computing world that is far more vast than what we have today.
So talk to me about some of the partnerships. VMware partnered with Amazon a year ago. They made it official. VMware also partnering with Google. What is the impetus to partner with what could be considered your enemies?
Well, the partnership with AWS is about bringing together the #1 private cloud with the #1 public cloud. And that gives customers great flexibility to be able to leverage their VMware software and capability on a public cloud environment. And that's great. Okay? With Google, we're bringing together Pivotal and the very developer-friendly capability that Pivotal has brought to half of the Fortune 500 with Kubernetes, which Google has created as a cloud operating system and put in the open source community, and bringing that all to the 500,000 plus customers that VMware has in a secure manner with NSX. And that's creating a kind of developer-friendly infrastructure that allows companies to develop these next-generation apps, put them in containers, and deploy them on-premise or in the public cloud. And this is exactly what customers are asking us to do.
Do you have any concern that these public cloud owners could steal your private cloud business?
Well, look, what I see is that when new things happen in the industry, if they're good for customers, if you stand in the way of those, you'll do so at your own peril. And just like when VMware first came out, as a little bitty tiny company, right, when it was just starting, Dell was the first server vendor to embrace VMware. And yes, we sold fewer servers at the beginning because you could virtualize the server. But we ended up selling a whole lot more servers than we ever imagined. And now we're #1 in the world in servers. And we're growing, double digits, and that business is doing very well. So here again, I think when customers want different modes of IT, when they want the public cloud in addition to the private cloud, it's important for us to listen and to bring those capabilities to our customers.
So when it comes to the Amazon deal or the Google deal, how can Dell in particular more broadly use that deal?
So, VMware and Pivotal are both part of Dell Technologies, and certainly combining all of our sales force, across the company, all of our channels, we'll be bringing those capabilities to all of our customers. And one of the things that we've seen in the combination is this idea that customers actually don't want to have more partners. They want fewer partners. And by bringing #1 in everything all in one place to our customers, we've seen really a fabulous response. Revenue synergies greater than we thought, coming faster than we thought. And it's because we've brought this broad set of capabilities. So, as I've said, Dell EMC, VMware, go together like peanut butter and chocolate.
That was Bloomberg's Emily Chang, of course, speaking exclusively with Dell Technologies Chairman and CEO Michael Dell. Meanwhile, Showtime is being sued for problems with its live stream during the blockbuster boxing match between Floyd Mayweather and Conor McGregor. Now, the lawsuit claims the fight, which was provided through Showtime's pay-per-view app, did not provide clear access to view the fight despite paying the full advertised fee. The suit is seeking either $200 in statutory damages or recovery of actual damages. And the bout was the first major boxing match available to order on pay-per-view online without requiring a pay TV subscription. Showtime announced it will issue a $100 refund for customers who purchase the pay-per-view access. Now coming up, it's turning into one of the most hotly contested investing debates this year. As the value of Bitcoin continues to rise, are we in the midst of a digital currency bubble? This is Bloomberg. So it's another day and it's another new record for Bitcoin. The cryptocurrency is now trading above $4,500 for the first time. Is it a haven amid geopolitical instability, or is it a bubble? To talk about the price point and the ongoing interest in blockchain-powered digital assets, I'm now joined by Spencer Bogart. He's managing director at Blockchain Capital in San Francisco. Blockchain Capital claims the first VC fund dedicated to the ecosystem, launched back in 2013, and has invested in many of the industry's leading companies, such as digital currency exchange Coinbase, tech provider Blockstream, and Bitcoin wallet and storage company Xapo. Wonderful to have you joining us, Spencer. And record high? Is it a bubble? Is it haven status? Is this going to get any higher for Bitcoin?
Is it a bubble? Short term, maybe. Long term, definitely not. I mean, on the one hand, we have a bunch of assets that are up anywhere from 4 to 30 to maybe 100x. But on the flip side, if I walk around the streets and I talk to people, probably less than 1% of them own any Bitcoin. Almost none of them have ever participated in an ICO. So it's still early days.
Still early days, and we could see actually maybe the more generic investor, the retail investor, get ability to access this asset class that much easier. There's talk of an ETF, of course, exchange traded fund being launched by Gemini. How are you seeing the broadening of access to this particular digital asset class?
Sure, so there's a couple of angles to consider here. I mean, one is, you're right, I think that we're going to see some more kind of regulated, more institutional focused investment products. Earlier this year, I was a big bear on whether or not an ETF would get approved. I thought it definitely wouldn't. I've completely switched my position now. Was right at first, but now we're going to see a fully regulated derivatives market rolling out for Bitcoin here in the second half of the year, if not latest by Q1 of next year. That's going to pave the way into a Bitcoin ETF as well, which is going to make it a lot more investable for institutions. And then the other side is that, you know, the average everyday person on the street can already do this. I mean, everybody with a smartphone can participate. Blockchain Capital did its own ICO, and we had participants from Africa, Antarctica, 80 different countries in the world.
Your own ICO, of course, that being an initial coin offering, you released your own tokens. What about the ICO market, the regulatory eyeing up of the ICO market? We've seen the US SEC weighed in saying, look, these are going to be regulatable securities. How does that affect the plethora of ICOs that we see coming to the market?
I think overall it's welcomed. I mean, I think that overall the market has been looking at this, and we've seen something that's wonderful here, right? We have this universally empowering technology that allows people to participate on a global scale. The flip side is, I mean, that's the good part of it, right? The bad side is that this market has attracted in a lot of the penny stock type pumpers and outright scammers as well. And so in that respect, I think that the SEC kind of making a light touch but showing that they're paying attention is overall a very good signal to the market. And we've seen similar moves kind of across the world from other financial regulators.
How do I, as say someone who has my smartphone at the ready, wanting to start to get into this particular new asset class, tell me how I go about starting doing that, and also tell me about how I make sure I'm not duped by the scammers that are out there and buying the wrong ICO. How do I make sure I'm reading the right white paper and I'm ensuring that it's an investable asset?
So you do have to be careful out there. There are a lot of websites that help provide a list of upcoming ICOs. One that I might recommend is Smith & Crown. But in addition, I would watch for important signals that you would normally look for in investments. For example, if Blockchain Capital, our firm, or any of the other large brand names in the space are participating in the ICO, you can kind of assume that that's a good check mark of due diligence on the ICO itself. I mean, otherwise you need to do really deep due diligence on the team to understand their background and make sure that they're not going to run away with a bunch of ICO cash.
Yeah, what about just the ongoing industry potential change that we're going to see? This is all underlying by blockchain capabilities. This is something that could revolutionize the way government, keeps record keeping, for example. The energy industry is deployed. How are we going to see blockchain, the actual technology, really revolutionize the way in which we all work?
It's a good question. I mean, for one, we're already seeing it affect the money in exchange of value and assets and investments. On the flip side, we're also going to see some pretty exciting projects being announced over the next coming weeks, one of which uses tokens to incentivize a secure network that could provide a more private and more secure internet around the world. I mean, we're talking about a type of network that might be able to bring Wikipedia to China en masse, right? So a truly global and censorship-free kind of resistant internet.
I'm also, though, seeing the Whopper coin. I don't know if you saw it on Twitter yesterday, today. Apparently, the Russian Burger King is launching its own token. I mean, what are the more ridiculous natures in which we're starting to see ICOs be deployed, and how ridiculous could it get?
How ridiculous it could get is anybody's guess, but you're right. I mean, naturally, when we see assets going up, 100x off of an ICO, it's attracting in a lot of different people that are trying to kind of claim on this. And I think the Whopper coin announcement from Burger King Russia was one of these instances. It's not really getting much circulation within the actual industry, but I know it's been a big headline-grabbing thing outside of it. So again, due diligence is pretty important here in this space.
And Spencer, I mean, you work at Blockchain Capital, which had the first ever venture capital fund really in 2013. It was 2013 that we saw the original Bitcoin slump and concerns. When do you see this go really mainstream? When will I be able to discuss this with my parents?
It's already happening in a large respect. So, I mean, even a year ago, even as somebody that's been a super bull for a long time, I didn't imagine how quickly the sentiment could change. So, a year ago, it was still pretty much people were almost entirely skeptical, but just trying to answer a couple questions. Now people are saying, okay, I definitely get that there's something here, and I just don't quite fully understand it, but I'm 90% of the way there. So, when I have conversations around, everybody wants to ask about it, uncles, aunts, nephews. So, I think that's over the next 12 months, especially as we start to see kind of mainstream investment products like an ETF, and as banks start to offer more cryptocurrency services as well.
I'll get in on the act as well. Spencer Bogart, it's been great having your analysis and your experience on the show. Managing Director of Blockchain Capital. Great to have you with us. Now, coming up, a new shared workplace startup has big plans to take on the likes of WeWork and Regus. How Knotel aims to do it. That's next. And a quick programming note, this Wednesday, David Weston will interview one of the most famous investors on the planet, Warren Buffett, Berkshire Hathaway chairman and CEO. You can catch that conversation at 11 a.m. Eastern Time. This is Bloomberg. Now, Domino's is about to test their customers' appetites for driverless deliveries. Now, the pizza delivery chain is teaming up with Ford Motors to run a test pilot program in its hometown of Ann Arbor, Michigan. During the test, there will still be a driver at the wheel, but with blacked out windows, and they won't be interacting with the customers. When the car arrives, well, the users will use a PIN code to unlock the back window and retrieve their pizzas from the heating compartment that stores the food for transport. A camera will capture how the customer receives the order. Now, Domino's says the goal is to see if customers like the idea of having to physically get their pizzas from the car versus having it delivered straight to the door. The joys of modern technology, hey. Now, competition in the shared office market is heating up, and one startup with lofty goals is Knotel. Founded in 2015, the company provides offices in various locations across New York and San Francisco. It recently closed a $25 million funding round from investors like 500 Startups and Rocket Internet. But with its biggest competition, WeWork, showing no sign of slowing down, does Knotel have what it takes to go the distance? Joining us now from San Francisco to discuss is Knotel co-founder and CEO Amol Sarva. Thank you very much for joining us, Amol. And talk to us about what's your USP here? What's your distinguishing factor when it comes to me looking for an office? Why would I go to you rather than to WeWork or Regus, for example?
Well, it depends on if you're a real company. We do headquarters as a service. It's a super old idea, the idea that small teams of people, 1, 2, 3 lawyers, might share a couple of suites together. I mean, Regus has been around for 30 years, but what we do is take this thing to what real companies really need. If you're 50 or 100 or 200 people, you still don't want to sign a lease, deal with all the building management issues. You want to focus on your business. The way to focus on your business is to let someone else provide you the headquarters as a service. That's what we do.
I see. So it's bigger, it's headquarters. What about which cities you're seeing the appetite from, your expansion plans? Because that $25 million, I'm sure, is being put to work.
Yeah, I mean, we've been growing so fast, but just the last 2 years. We just started at the end of 2015, and now we're at 25 locations in New York, nearly 500,000 square feet. And today, I'm actually here partly to talk to you guys in San Francisco, and to announce that we're launching San Francisco as well. So our first location in San Francisco is at 5th Street and Mission, and there's going to be a lot more.
In New York, you've got the lofty aim of becoming, what, the #3 provider. You want to have 1 million square feet leased by the end of 2017. How is that going?
It's going great. I mean, the nature of the business, the thing that changed in real estate in the last 10 years is it became possible to use the ideas of e-commerce and marketplaces to get things like offices and homes and other things under control. The first generation of the internet didn't do anything for the way you bought a home. You just learned about your home. Same thing with office. But that transformation is starting now. For probably 100 years, people have been sharing offices in London. And up until this moment, still less than 1% of the global office marketplace is flexible. But flexibility is the thing that everybody wants. The lease is the taxi medallion of the real estate category. There will not be leases in the years to come. And now as that 1% goes to 10 or 20 or 30% of the total global market, it's not going to be little co-working or professional suites type users. It's going to be real companies. Those are the ones we serve.
Interesting you mentioned London there. In London, in fact, I think it's just been announced that the #1 demand for office space at the moment isn't coming from the banking sector, isn't coming from the tech sector, but it is coming from this flexible office provider, from co-working providers. Are you going international? Are you going to come here to London?
We'll be there very soon, and we'll be in person together on stage. But absolutely, there are a bunch of cities in the world that are super cities. And each one of these super cities is worth tens and tens of billions of dollars in revenue per year. We started in New York. We doubled and doubled and doubled and kept on growing. And after a while, we thought we could probably 100 times the business just in New York and not even scratch the surface. Honestly, the markets are that big. But we're moving San Francisco, London, many other cities in the months to come because the market is so vast and so ready for change. There's actually nobody even close. The biggest players, the oldest players like Servcorp from Australia or Regus in London, and even WeWork, which is actually 90% smaller than those guys are big. Everybody else is so far behind. I think we're the next one.
So do you not actually serve smaller clients at all? Do you have to be of a certain size to be able to access your offering?
We serve bigger companies. We customize headquarters for them. So if you're a 50-person team, you take a floor of a building on 17th Street in Manhattan. We make the whole thing sing and dance beautifully so it's your culture, your brand, the kind of position that you want to present to your investors, your staff, everybody who's coming in to see you. But when a smaller company comes to me and says, hey, Amol, I'm starting my business and we're growing a lot and I'd like to find a place. Should I go to some co-working place? I say, no. You're going to be 50 or 100 people before I know it. Just come and work here for free. Anybody who contacts me, we put them in, we find a nice place to take care of them, and before we know it, they're running multiple floors of buildings in different parts of Manhattan and now in San Francisco as well.
Need more money?
The vastness of our ambitions, we have just begun. We are building a vast global enterprise. The category of real estate is so colossally huge. When I hear any comparison made between Knotel and something else that exists, the thing I point out is that 99% of the market is not flexible. It's old-fashioned leases. And it's a huge list, a massively fragmented list of owners. Even the biggest owner you've ever heard of is tiny. And so there will be hundreds of millions of square feet that are Knotel in the years to come. And so yes, we are going to put capital to work.
Interesting stuff. Knotel co-founder and CEO Amol Sarva, great to have you with us, and good luck with San Francisco's expansion. Now, that does it for this edition of Bloomberg Technology. On Wednesday's show, we'll bring you our exclusive conversation with Pat Gelsinger, CEO of VMware. And a reminder that we are live streaming on Twitter. Check us out, why don't you, at Bloomberg Tech TV, weekdays, 5 p.m. New York, 2 p.m. San Francisco, and of course 10 p.m. right here in London. That's all for now. This is Bloomberg.